Hello, hello, hello. All right. So you're once again welcome back to today's episode, and I'm going to delve into volatility 75. It's been quite a while. For those of you who are on my WhatsApp page, I mean you've been hearing from me every now and then. Um, we keep ourselves updated on the WhatsApp platform. A couple of times, I mean, I put a few analysis here and there on my WhatsApp page. Although I don't necessarily put straight away signal that buy here, do this, but then, I mean, for those of you who are matured, can read in between the lines that I'm saying that um, I put a snapshot of my screen for you to know when to enter trade and where to exit. There are times that I also give you, okay, when the 1 hour time frame, when it breaks structure, this you enter the trade. So um, it makes you become a very proactive learner when it comes to trading. Okay. Now, quickly let's go to our chart and see what is happening on the chart. Um, I want to take this opportunity to say a big thank you to Michael. I had the opportunity to have a short and a brief chat with him on one of the platforms, and it was a great opportunity. So I'd rather want to say that thank everyone for the privilege and the opportunity. you know Now let's go straight to the video. So this is volatility 75, and you can clearly see that we are in a bearish market situation as we speak on the daily time frame. All right. Now, what has accounted for that? What has really accounted for that purpose is as simple as that. When market was trading on the monthly time frame, market actually rallied into an order block on the monthly time frame, and when market rallied into the monthly time frame order block, he did a few things, and then we saw the ultimate reversal on the daily time frame. So this actually depicts the picture that we say that when we are trading on the monthly time frame, our next point of call, especially for reversals and retracement, is on the daily time frame. Okay. So basically, when you are trading and you look at the time frame alignment, which I have explained on my channel, you can look out for that video. When we look at the time frame alignment, it tells us that, okay, so if we have met an order block, or we've made a mitigation block, or we've made a breaker block on the monthly time frame, which other time frame must we make reference to see where to actually join the market or enter a trade? And beautifully, I have delineated that when we are looking at price on the monthly time frame, we look at price from the perspective that we should have a structural shift on the daily time frame. So when we are in the monthly time frame, we want to see price maybe trading into an order block, or a mitigation block, or a breaker block, and where necessarily we do want to see price actually reacting to that price action. We want to see it happening on the daily time frame, so that we have a clear picture that, okay, as price has got into the order block. So clearly, this is a typical example. Now, this line delineated here was where price actually um let me indicate it with a red line. This is exactly where this is the mean threshold of the order block on the monthly time frame. Okay, this is a mean threshold of the order block on the monthly time frame. And imagine price trading into the mean threshold of the order block. Necessarily, what you would want to expect is that, oh, so you could see how price briefly did an action here. It had this low, went up a little bit further, came down, broke below this low. On the normal, you would naturally say that, okay, price has shifted structure. But then watch what happened in here. Price traded up in here with this bullish candle. The next day formed this bearish candle right in here. It traded a little bit upwards, and then it traded downwards in addition, and then you realize that it couldn't close fully beneath this, close in inside of this other block, and we saw the rejection upwards. And then I'm saying that, listen, you can't always be right, man. You can't always be right, right? So basically, you probably may have entered third entry trade in here as price traded into this area. Yeah, probably on that day you would have gotten some trade. Then obviously price retraced back upwards, and then you obviously probably have been taken out of the market. I mean, who knows? And the market retraces up, comes down back into this area again. Now, beautifully, let me show you what is happening in here. You see, don't always be in despair when the market says that I have not yet finished with the trend and I'm still going. For instance, as you entered a sell entry in here, and then price rallied up high, making you know that this wasn't a proper swing low, and then now you've been taken out of the market. Now watch out, watch this. As price trades up and retraces back into this area, you could have beautifully joined a market in here. This was this bearish candle in here now becomes the order block. Now this candle in here now becomes the second order block because it closed as a bearish candle. Okay, now if it is regarded as the second order block, then it means that it becomes a proportion block. And as we have all learned that with proportion blocks, price would usually trade into just 25% of the block when we take a proportion block. So for instance, if you take from this high all the way to this low of this particular bearish candle in here, now beautifully, what can you see in here? You realize that this is the 0%, this is the 25%, this is the 50%, 75, whichever reverse direction you go. I mean, it's still okay. So this is price traded into 25% of it, and you could see how beautifully price didn't come into the 50% level. Now this is a very good information you have to take notice of. Okay, so price traded into the proportion block 25%, and you could see how the bodies of the candles respected the fact that they were not trading any further beneath the 25 level. And then beautifully you could see how price rallied up, which should tell you that as price did this inside the 25% level, inside this area, you could have got a very nice trade in here, and then you rally up, and then price swung higher into this area. When price swung higher into this area, you could see how it came back again, now rallied up higher, and then ultimately the structure shift happening right in here. So the market structure actually shifted right in here. Okay, now let me put some a line in here to indicate where we had the market structure shift. Okay, so beautifully, this is where we had the market structure shifting. As nice and as easy as this. Now, right before this movement right in here, okay, we had a consolidation. We had a consolidation happening inside of this area. And this form of consolidation actually gives us a clear depiction of what has actually, or what is actually transpiring on that. Okay, so this consolidation happened here was the first consolidation before the movement up into the sky, and then we had the first retracement leg in here, rallies up above this first accumulation block, and then that's the second retracement, and then finally we had the smart money reversal happening right in here. Okay, so beautifully, if you see this scenario, then your eye is drawn towards the market maker model, okay, where we have the buy side of the sell market maker model for the sell side. Okay, so now this is the buy side of the market maker model. So this is a typical replica of when we are looking to frame sell entries with the market maker model. So now we have the first stage of the accumulation, second stage of the accumulation, and then ultimately we had smart money reversal happening right in here. Now, automatically, what market will do is that it's going to guide you and it's going to help you execute your trades using these levels. The first accumulation phase, the second accumulation, and then the smart money side. Okay, now the smart money side, the smart money reversal happens when we had the continuous bearish candles right in here closing beneath this continuous bullish candles in here. This is an automatic market structure shift, which we won't go into that for now because you may end up not always getting it right. Now, market structure shifts. Where do I rather want to consider exactly where the market structure shifts? Listen, when I have this candle piercing with the wick beneath this, I don't consider it yet. Another one, when it does it here, I don't still consider it until it breaks with the body of the candle. Then I consider that the market structure has shifted. Okay, now if I have the market structure shifting with this particular wick, what do I expect? I would normally want to expect price to do the retracement back, and then we rather want to use the last down close candle right in here as a breaker block, and then price trace into the breaker block, and then we see the rally away from. So this is the breaker block. Now watch this. This is the breaker block. Okay, now price trades back into this last down close candle in here, and watch how price didn't even go into the 25% level, but beneath it, and then but it still touched breaker block, and then we saw how price was willing to rally away from the breaker right in here, and then we saw the breakdown. Now, beautifully, whenever you have the market maker model, this is what I would rather want you to draw your attention to. Now, whenever you have the market maker model this way and you see the smart money reversal, it does it on the first, and then we see the reversal trading downwards. Now, mark up all the accumulation phases that you had on the market. So now beautifully, let's mark out the first accumulation phase. So assuming we saw the market right here, okay, we saw the market happening right in here, it did break the structure, and then it did this, and then it came back down. What you have to do is that just map out the first accumulation phase. Okay, map out first accumulation phase. Did I delete some line in here? Yeah, I think I did. So that is the other block. I mean, we've clearly understood that level, so let's not even go in there again. Okay, so we are going to map out our first so this was the smart money reversal. Now this is the accumulation phase one. Where is the high and where is the low? Okay, so beautifully you can see this is the high right in here, this is the high, and then this is the low. Okay, now if we have the high and then the low, what else must we expect? Okay, what else must we expect? Now if we have the low in here and then the high in here, what necessarily we would want to expect is this. We want to see price break below after the first retracement into the smart money reversal breaker. Now, when we have the continuation leg downwards, we want to see price retrace back into any area inside of this swing. Take note well, we want to see market retrace into any side of this swing from this high to this low. And then now, what do we expect? Price retrace back, and watch this. It went and never went into the 50% level, traded into where? It traded into the 25% level, wicked into it, and then we saw the rally down. Now, watch this. I always want to see price not go beyond the 25% level. There are days that it can go beyond the 25% level, yes, and go into a 50% level, but I always want to see price doing a form of reversal in the 25% level. Now, what are some of the caveats? So the caveat is that usually when we have the buy side of the curve. The particular swing or the particular accumulation level that we are considering, is there any form of mitigation that's going to happen in there that can be used? So now, beautifully, remember when we had this order block and we had this proportion block, these candles, continuous candles in here, traded into the proportion block, and then it ran back up higher above this. So now this bearish or this down close candle, now at the right side of the market maker model buy side, it becomes a mitigation. As simple as that, it becomes a mitigation. So you realize that from this low to this high, it becomes a mitigation. Now you realize that price trades inside of this mitigation and never goes outside of this mitigation. So if we are going to say that we are going to draw a line, or we are going to delineate the mitigation, it's going to be all the way inside this area. And beautifully, you can see how price, after it traded below, now watch this. If price trades and wicks beneath this, we haven't still broken the structure for the market maker buy side second stage of accumulation. No, until it breaks with the body of a candle, then we can wait for that kind of retracement into this mitigation, and then we want to see a sell-off. I hope it's more clearer. So now price trades into this area. Now we are on the monthly time. We are on the daily time frame. What time frame will you necessarily want to see to say that, okay, now we are into this mitigation? Or it's not even going to use this mitigation, but it's going to even use the fair value gap in here as an inversion and then trade off of it. Price could have disregarded the mitigation and traded into this inverted fair value gap in here, and rather used the gap in here as an inversion fair value gap, and then traded inside of this area, and then does the reversal. But then we are considering the leg for the accumulation. So from this high to this low. Now, beautifully, we had a mitigation. So we are looking at the mitigation. When we're on the daily time frame, the only action that can guarantee that we are going to reverse will happen on 1 hour time frame. Let's go down to the 1 hour time frame. So we can see what we were looking for right in here. This is the 1 hour time frame. This was the mitigation area. And on the 1 hour time frame, immediately, price traded into this area, into the mitigation of that second stage of accumulation. And then what did price do? Price broke structure. Let me come again. Price broke structure right in here. You see, when we were here, price just wicked to break the structure, which you know that, just as I said, I won't want to follow a structure shift with a wick. I want to have a proper displacement. So now you watch this. Inside of this area, we didn't have, all we had was the wicks. All we had was the wicks. Okay. And the body of the candle had not properly broken beneath it. Let me just put my candle, my line in here for you to see. All we had was the wicks, and price had not properly broken beneath it. And you could see when, so clearly, let me show you well. I want to stretch the chart so that you can see clearly when price actually did the structure shift. Now, you can see clearly how all this area, there wasn't a proper market structure shift until the market officially did that inside of this area. Inside of this area. When this market closed, then we clearly saw that there was a proper market structure shift. Now, when we had a market structure shift inside of this area, now let's go up. Then on the daily time frame, you can clearly say that, well, we have had a market structure shift, so you can engage the market. Then you could engage the market from that point. Now, beneath this, beyond this area was all inside of the mitigation. This area was all inside the mitigation. Now, if we have a market structure shift happening right in here, you always want to see, so for instance, it shifted in here and we saw a continuous down close candle until this point. Now, what you want to do is that you pull a fib from this high to this low. From this high to this low, watch how price retraced into the 25% and never got into the 50% level, coupled with the fact that there was a fair value gap resting in here that price had to actually trade into. And beautifully, we saw how price continued rallying down. It's as easy and as simple as this. Now, let's go down to our daily time frame again so that we don't miss all that I wanted to show you from what I was saying. So beautifully, you could see how inside of this mitigation, price retraced back into it and did the did the market structural shift inside of this area into the 25% level, and we saw market breaking down all the way into this area. So that is what happens when we are trading with, or when we are looking at the market maker models. Price would always retrace, go back into the 25% level, and we want to see it continuing rallying down. Now, beautifully, when price did this, it came down, broke the structure of the first accumulation with the body of the candle. It did with the body of the candle right in here. If it does that, what else are we expecting? I want to see another form of retracement back into which stage are we in now? Which of the phases are we in now? So now we are looking at this area. So let me take this off first and then bring our fib 2 right in here. So this stage of accumulation is where we have gotten to now. Beautifully, the third one, the first phase of accumulation. Now watch this. Price retraced back into where? Price retraced back into this down close candle. Now you realize, don't forget that this down close candle was an order block, inside of which we had this mitigation block. We had this proportion block that price traded into the 25% and rallied off. So here, when price trades into this, you realize that 25% of it is here. From this high to this low, 25% of it is beneath this. And then you see how price traded into this particular down close candle, which was the order block from which price rallied up higher. Okay, from which price rallied up higher before we give in the second phase of the accumulation. So now you realize that now what is the next mitigation area? It becomes this particular order block right in here. So let me highlight it. This is entire mitigation area. This is the entire mitigation area, and it's within the 25% level. Price trades into it, where here, and then what do we do? What do we have? We have price rallying down. Price rallied down, but never closed with the body of the candle beneath this. So the chances for reversal was higher. Chance it reversed into this area, and then we saw price rallying down into. We want to see price close below this area, just like when price traded into this area and came and closed down beneath this with the body of the candle. Then we need that we were outside of this zone again. We're outside. I mean, it's over. Then price comes back. We look at this, the first phase of accumulation. Price comes into it, and then we want to see the retracement leg. It did into the 25% level, retrace back. We want to see price rally and close down beneath this area. We know that this becomes a permanent swing high. Then we want to look at price trading back down. As beautiful as that, this is the market maker model for you. Now, when price came into this area, it did a form of reversal into this area. Let me give you more insight into this area. Now, let's go down to our 4-hour time frame. So beautifully on the 4-hour time frame. So this was the first form of reversal that happened. Let's take this off. And then we saw our entry somewhere right in here. Okay. And then we saw the whatever. Okay, now beautifully. Let's see this. This side we had price trading back inside of it right in here, and then we saw the breakdown inside here, and then price retraced back. Then this was the day that we saw price reversing. In your mind and in your wildest imagination, what would you have thought? Oh, price is going to reverse. It's going to reverse. Now watch this. These are things that so the new week began from this day. This particular let me delineate this with a line. The new week began right in here. Okay, this week began right in here. And just right after the opening of the new week, we had a fair value gap right in here. Okay, we had a fair value gap right in here. This line is too I want something very light. Let me go to the options. Visibility. Okay. No. Okay, so don't worry. Whatever the situation is, I'll try and indicate what I want to indicate. But take note that this is where the new week opened. Right after the new week opened, we had this tiny fair value gap on the 4-hour time frame happening right in here. So it's a tiny fair value gap. So it's the new week open first fair value gap that was actually seen. Now watch this. When we had price rallying up in here, okay, let's go down to our 1-hour time frame to even give you a more clearer picture. Okay, so you're saying that from daily we should look at reversal on the 1 hour. Yeah, I said that. So let's see where we had a reversal happening on the 1-hour time frame. So beautifully on the 1-hour time frame, we had price rallying and doing all form of whatever it did, and then we saw the retracement. Now what is inside of this area? The reason why I brought the 4-hour time frame, I would explain. Inside of this area, and then this swing in here, when price actually traded in here, it formed a high in here. Let me go to the 4-hour and give you a more clearer picture so that you have a better understanding of what I will explain to you on the 1-hour time frame. Now watch this. We had this particular swing in here into the mitigation, and then we had a rally down. Now watch this. We had this up close candle forming the order block. Okay, this up close candle forming the order block. Now the order block left us with a fair value gap right in here, inside here, and then it left us with another swing high in here, which is not regarded as a major swing, is a minor swing high, which would mean that there will be liquidity resting above it. Why am I saying so? Because when we have a swing like this, and then we have another swing that doesn't close beneath this low. It means that this, whatever has been formed in here, are just liquidity points that will be swept. So these are buy side liquidity resting above this high. Now, beautifully, another thing that should even give you a more clearer understanding that that area will be revisited is this. Now, you see this down close candle, which is the order block. You would usually want to see that when there's an order block and there's going to be a proportion block, the proportion block trades into the order block, touches it before we see the reversal. But now in this situation, the candle that formed, which should have been a proportion block, didn't close in or touch any part of the order block right in here. And you could see clearly it happening in here. There wasn't any contact. So now this candle in here is not regarded as a proportion block. And automatically price trades into this area. And when you see price doing the reversal inside of this area, if it has not taken the high, is illusion, is fake. Because the ultimate target is the high in here, and we're expecting price to sweep the high. And then price does it. Anytime price takes the high or it sweeps the high, then automatically when we see anything happening on the 1 hour as a form of reversal, then it is authentic and it is legitimate. Now, beautifully, you could see when price traded in here, you could see that, well, there was a high here, a low here, high, and then price comes in here and even breaks with a wick. And this is not an authentic structure shift, which I told you that I want to see price shift with the body of a candle. And beautifully, you could see how price retraced back into this area. And then what did it do? It took the structure from this area. It took the high inside this area. And then ultimately, we had market breaking down. Now, prior to price trading, taking the high, it formed a high in here, a low. So this high, watch this. This high is the highest among these two in here. And then prior to it was this relative high in here. And then it breaks the structure with the body of the candle right in here. Then it becomes automatic that price would retrace back into this area. And they want to see a rally down. Now watch this. When price broke the structure, traded and formed this low, it left another high in here. Now in the same scenario, price has not broken the low in here with this low. If it retraces, we wanted to even expect it to take this high, but it doesn't do that. It comes back down. So it means that from this swing high, we have this swing low. Okay, forms a high, forms another low, forms another lower high. Then we regard this area as accumulation or consolidation. So automatically price trades beneath the consolidation. This is where the manipulation happens. Trades beneath the consolidation, comes back. Now watch this. The 4-hour opening gap that I told you about. Now watch how price trades just into it, and then what do we have? Bum, 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 bum. And then price breaks down further into this area. As beautiful as that. So now we have a swing. So for instance, if we are even going to regard this swing in here, and then this swing low, and then this swing high as the major swing, we have a shifting structure with the body of the candle right in here. And then we see the reversal, retracement here. And then what do we see? Retraces into this. And then it touches the body of this candle in here. Okay, touches it with a wick. It touches it with a wick, and then you see the rally down. Now, this 1 hour candle has traded into that 4-hour candle. Now go back to a 4-hour time frame. We would see that this particular candle in here now trades into this particular 4-hour candle deeply, and it wicks into the fair value gap. And then we see the reversal. Now this candle now becomes a valid proportion block. Now let's take a fib and take the 4-hour proportion block and see what happens right in there. Now watch this. This is from this high to the low of this proportion block. So I told you that proportion block, 25% level, we wouldn't want to get anywhere close to 50% level. And beautifully, ICT is the king, man. Michael is actually the king. I'm a son of ICT. And then we see the market rallying down. How best would you want to explain this? How else would you want to how else would you want to break down this chart and this to give you perfect entries and perfect analysis? Guys, this is where I want to leave you with. Now, the question you want to ask me is, okay, so as we have gotten to this level, what else can we expect? On the 4-hour time frame, let me go and show you something. On the 4-hour time frame, so we have this proportion block, and then we have price rallying down. We are seeing traces of a fair value gaps in here. There's some small fair value gap in here. There's another form of fair value gap right in here, and then we have price trading down. Is price going to revisit? It's a question for the gods, you know. But let's look at it from this perspective, from the daily time frame perspective. What would be the draw on liquidity? There is this fair value gap resting in here that I want to see. First of all, price taking down. Okay, just beneath this price level, I want to see first of all see price into this fair value gap, and the next draw on liquidity will be beneath this. If price is able to trade below this, then we know that we are actually coming for this low right in here. But if price gets into this area and is unable to, then what I want to do is that I want to consider this as a proportion block. And you know how to trade a proportion block. I wouldn't want to speak much. You know, I wouldn't want to say so much because I've explained things to you now. I want to treat this as a proportion block. You know where I want to see my reversals, and then you are good to go. Best in your trading. To my channel, please do well and subscribe. I'll put the link to my WhatsApp on the description box so that I can join for us to all make profit together. Enjoy the rest of the day. See you.